Hello, everyone, and welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our market research and over the past week, here's some notable token price moves and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. Well, everyone, Happy New Year. Welcome to 2026. It is officially the start of a new year and hopefully good things to come. Just kind of some quick headlines. Morgan Stanley filed this week for a Bitcoin and ETH ETF, really signaling strong institutional support for digital assets. We'd love to see that. Yesterday, the MSCI index, which was debating if they should expel digital asset treasury companies from their index, officially said that they are going to be keeping those digital asset treasury companies for now, the most important of which includes strategy. There will be some further considerations for that in the future, though. Grayscale also officially converted their ETH trust to an ETF, and they're going to be distributing their ETH staking rewards from it as well to investors. So definitely seeing the ETFs for digital assets become more sophisticated and more differentiated in kind of how they handle their assets, and not just having a buy and hold strategy. But as always, we're here to talk about some tokens, so I will jump right in. First up, we're going to talk about Helium. So Helium, they are a decentralized wireless project in the DePIN category, which stands for decentralized physical infrastructure. This past week, Helium announced that they're going to be ceasing their token buyback program after only about 2 months. So in a post on X, the project's founder noted that despite spending on token buybacks, the market didn't really care. And therefore, they decided to reinvest in the project's growth instead. So just from a numbers perspective, to give you context, to date, Helium has spent about $2.2 million on token buybacks, which averages to around $200,000 a week. So despite this, just really bad market conditions and also low liquidity have really led to volatile price performance. To be clear, though, just because they don't have, a token buyback anymore does not mean that there isn't going to be demand for the Helium token. The HNT token, like most DePIN projects, operates on a supply and demand function, essentially. So if you're not familiar with Helium or any DePIN project, the whole idea of the token model is that people who provide these physical infrastructure services receive tokens that are emitted from the network. And then in return, people who access those physical infrastructure services or pieces, they have to provide the tokens back to the network in form of payment, and those are then burned. So it's a very good incentive system, a very good use of tokenization. So in the case of Helium, individuals who basically run these hotspots that provide wireless internet access or wireless mobile access, they are given new HNT tokens, and then users who access the network and pay for it, they don't necessarily know this, it's kind of obscured in the background. They are essentially paying in HNT tokens, which then get burned. So idea is over time, as usage increases and emissions do go down because it's on a 4-year halving schedule like Bitcoin, the demand for HNT will outstrip the supply. And actually right now, that's exactly what's happening. Helium is actually outstripping their emissions by about 60% based on their on-chain revenue. And this is really generated and pushed by Helium's daily active users, which actually peaked around Christmas about at 2.5 million, but it's right now at around 1.6 million daily active users. So despite this, unfortunate turn of events for them, the token is still up 12%, as the market has been doing pretty well in the last week. Okay, next up, we're going to talk about Lighter. Lighter, which is the Lighter protocol, which is the hottest new perpetual futures DEX on the market, essentially began their buyback program on Monday. So far, they've purchased about 280,000 tokens worth $792,000 at today's prices. So the project also announced yesterday that it's going to be rolling out support for trading equity perpetual futures. This isn't going to be 24/7. They're doing it 5 days a week, but 24 hours a day. And Lighter is really joining a ton of other equity, other platforms offering equity perpetuals, including Coinbase and Robinhood as like the top ones. So this isn't like a new product, but interesting to see them branch out in this direction. This all comes on the heels of a fairly rocky token launch for their lit token that happened right after the Christmas holiday. Upon launch, the token did crash about 30% as a lot of people were farming this token's airdrop, but it's since recovered and it's now up 14% on the week. All right, last but not least, we're going to talk about Jupiter. So on Monday, Jupiter, the largest DEX protocol, DEX to aggregator, on Solana, launched their JupUSD stablecoin. So the stablecoin has been launched in conjunction with Athena, which is a stablecoin issuer itself. They have a couple different stablecoins. They've been really working on white labeling some of their stablecoin solutions. And 90% of the stablecoin is going to be backed by BlackRock's BUIDL fund. So according to the project, the stablecoin is backed by a combination technically of USTB, which is Athena's stablecoin, which is backed by the BUIDL fund shares, and USDC, which if you're not familiar, that is Circle's stablecoin. So the idea is that the BUIDL fund will pay interest on, does pay interest on its shares to holders. And so that should trickle down through USTB to JupUSD. Unclear if that yield is being passed on to holders or if it's going to be pocketed by Jupiter or even by Athena. Anyway, in the future, though, Jupiter did mention that they're planning to add additional backing assets to their stablecoin, which could include potentially Athena's USDE stablecoin, which is different than the USTB stablecoin. The JupUSD stablecoin is going to be available to use on Jupiter's platform, including their exchange, lending protocol, and across any other Solana DeFi apps that choose to support it. As of today, though, JupUSD has about $11.5 million in AUM, so we'll have to see if that continues to take off and grow. Jupiter is up 16% on the week. All right, guys, that's all I have for you this week. I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.